Hey, welcome to the Closing Beat, everybody. Happy Monday. How's it going? Welcome to our quick update show here. It's just a stock market update show. We just have a little fun here, go over the good, the bad, and the ugly with the stock market, and hopefully help answer some questions if I can. So I'll go through everything I've got to share with you, and then if you have any questions there at the end, I'm happy to answer them. We have our Guess the Dow winner from last week, Michael. His gift card is on the way to him. Oh, did it go out? It may be on the way to him, but it's $100 if you can guess without going over. Closest without going over, guess the Dow. You can go to that website right there and take your shot. We don't do spam or anything like that. I mention that every time because I think that's important. We're just playing a game. This is not marketing material. This has nothing to do with anything else other than just a fun game that we can share with you guys. And if you're one of our customers, we'll credit your account the $100 unless you want us to send you the gift card. That's okay too. All right, a little bit of homework here. Wednesday, the markets close early, right? Thursday, usually the day before, the markets close early, 1 o'clock Eastern time. And then the day of the 4th of July, Independence holiday, the markets are closed. This is sort of odd in the sense where the market will be sort of closed early, then closed Thursday, but open again on Friday. So there'll be no show on Wednesday, no show on Thursday, naturally. And Friday, we'll be back. So we'll come announce the Guess the Dow winner, and we'll give you an update as to how the stock markets did. Historically, they are positive the day after, the first business day after Independence Day holiday. But we'll see. I mean, things look pretty good right now. Last week, we did our class on loss statistics, right? All the geeky details about when the markets fall and how long it takes to recover. Going to put together a great study for our customers on all this buying weekly garbage. We're going to kind of refresh on that study there. But anyways, you can go in the dojo and you can check that out. That class is locked up and loaded there. Anyways, the markets were higher to finish out the day here. You had small gains across the board there. Was started off better, right? Throughout the day, the market sort of faded away just a little bit as we went there. 3 positive things came out. I probably don't need to tell you. I'm sure you've heard already. Trade talks between Trump and China, that highly anticipated meeting. What that resulted was they were going to hold off on the additional tariffs, keep the existing tariffs on China right now to hold their kind of feet to the fire, I guess. And China's demand was that they let Huawei buy from U.S. companies, and Trump said, okay. I wouldn't have thought he would have said okay, but he said okay to that. And also he went to North Korea. I'm not sure what to think of that. He went to North Korea, walked a few steps into North Korea, shook hands, came back. I don't know why they're so friendly there, but I don't follow that sort of thing. Anyway, so 3 positive events there, and because of that, yeah, the market's higher on the day. The Huawei thing really helped semiconductors. We'll go over that here in just a second, but let's take a look. Here's your stock market. The S&P breaking out to new highs today. Looking very strong here in the short term. The Dow did fade back a little bit throughout the day. That was sort of Boeing. Boeing held it back again today. That was your worst performer in the Dow. Looks like it's going to be the end of the year maybe for that 737 MAX. That's horrible. We'll see. I mean, I guess there could always be a shocker. It came out in September, and now they can go fly again. I don't know. But anyways, the Dow was held back a little bit. NASDAQ very strong on the day. A lot of that from your tech stocks, so good performance there. The Russell did hold itself back a little bit, but I don't care. I think that's totally acceptable that the Russell was not necessarily right in line with everybody else. It had a great couple days. For the last 2 days, the Russell's actually strongly recovered, and so I think that one's okay. I would be sort of fine with that one taking the day off. Here's what we got. Today, the markets, well, the S&P 500, the SPY, gapped higher by 1.25%. That's the first time that's ever happened in the first day of July. Did you know that? It's the first time it's ever happened. It happens to be a Monday, so we look back. There are 49 other times where the SPY has gapped higher by that much. The key takeaway from any little things that we look at is 5 days later, the market ends up lower by just over 1%. What's that tell you? The markets shoot off the week with this great positive gap higher, not a strong day, but a gap higher by that much. And it just shows that people like to take profits into that gap. So if the markets do fade away throughout the rest of this week going into next, since it's a holiday week, it's a little different. But if they do fade away, then it's really not that big of a deal. You'd look at it and you'd say, well, that's kind of like the historical performance. It's sort of expected. So while everybody's excited today, let's see how they handle that. If the markets do pull back a little bit or even have a good tomorrow and then start to fade back, I think that'd be pretty interesting. Could also be a time where the markets just keep chugging higher, and that's okay as well. So we just finished out the first half of the year. June is finished here. And for the first half of the year, the NASDAQ is your best performing index, the QQQ. You know what? Let's do it like this. Let's do it like this. So if you want to follow along in the dojo or you're on your own platform there and you want to take a look, the QQQ is the best performing index with a gain of 21.5%. Who came in second? Was it the Russell 1000? Yeah, it was the Russell 1000. You'll have to use the IWB for that one if you want to follow along. That's your second best performing area, and the Russell 3000. So we've got this sort of underlying strength there, of course, trying to push through the rest of June. Your best performer for the month of June was your small cap 600s. No, I'm sorry, it was the NASDAQ. The QQQ was your best performer for June. If you look overall, the equal weight, is it RSP? Your equal weight S&P is still beating the S&P 500. Kind of an interesting phenomenon. It doesn't last long term. I did a video on it. Nobody loved it. You guys had horrible comments about it. But the point wasn't to say that you do this long term. It was just to point out that the S&P equal weighted ETF or equal weighted index was performing better. Just a slight better performance there than the rest of the markets. Sector-wise, year-to-date here, technology is your best performer. Got a gain of almost 27%. You got consumer discretionary and industrials. XLI would be industrials if you want to follow along. Would be your second best performer year-to-date. Last month, it's materials. The XLB we were using to kind of show this to you. Not only did it have the best month last month, remember we talked about this, didn't pull back at all, showing incredible strength there. No sellers if you compare it to other areas of the market. So materials gets the best performance for the month of June. Second best performance was energy, and it was off by about 2%. So the 2% difference between materials and energy, and a lot of that came later in the month there, so understandable. Around the world, you want to look around the world, where is the best performing area right now, or best performing country? I don't know if you'd guess it. Yep, it's Russia, but you have to use RSX is the ETF. That's the most popular ETF there. Best performance year to date is Russia, 26%. Second best performance is Canada. EWC, I believe, will take you there. Yep, there you go. So EWC, and then Australia comes in last place. I use the EWA, just easy to remember there. Australia. Your best performing commodity is oil, so I think that's, we know that. We've looked at that. Best performing commodity for not only year to date, but also for the month of June. Worst performer is natural gas. I don't look at natural gas much. I put it up above if you like that sort of thing, but natural gas was the worst performer by far, negative 20% year to date, and lost 5.5% for June alone. Bonds continue to be the better performing area. Your 20-year bonds here, 10%, actually 10.5% on the year. And if you were to go back 1 year from today and compare bonds to the stock market, bonds are beating the stock market, which is also sort of odd. You don't see that all the time. So I thought that was kind of interesting. Not year to date, but go back from today, go back 1 full year. It would have been better off to have all of your money in bonds with that sort of push back down under 2% there on the rates there. Okay, let's take a look at the sectors here. Semiconductors were your leader today, off on our watch list here in the dojo. You can see it, 3% on the day. Basically, look, now that Huawei can come back and start buying chips from us here, we said this a long time ago, China doesn't have chips. Semiconductors. It's like their Achilles heel, so it was sort of a punch in the gut there for them not to be able to buy from our companies. It didn't help us either as well. So Micron Technologies, one of the better performers on the day, up about 4%. 88% of their revenue comes from overseas, not here in the U.S. $200 million a year in revenue from Huawei alone. And remember Broadcom, we've mentioned this numerous times here. Broadcom, the best performer, 4.33% on the day. They get $2 billion a year from Huawei. So that's good news that they're able to start selling back to Huawei. And because of that, semiconductors by far were your leader of the day. Remember, you need banks and you need semiconductors to have a good rally. All day you had banks and semiconductors bullish. So when the market was pulling back, that's a day trader's gift right there. It's just a fun game. Where do you find that little intraday bounce? And it happened today. It wasn't very big, but it did happen for those intraday traders. And it also made it tough to be short throughout the day if you happen to be a day trader. All right, because of that, you had gold pulling back here throughout the day. This is the gold miners. We've talked about this extensively. We gave you the data last week to back up the sort of nasty performance to expect going forward after such a strong run up in the gold miners, as well as gold. You could use GLD to track that. So that statistic and that sort of historical performance is 100% accurate at this point. I'm happy with that. Yeah, but maybe you're not happy. I don't know. If you bought gold on the way up, you're maybe not so happy. You got REITs down a little bit lower today. Now that the trade deal is not out of the way, but now that it's sort of like making progress again, does the Fed really need to cut rates? Now all of a sudden it's got traders thinking about this. July 31st is the next rate announcement, and almost everybody fully expects the Fed to cut rates by a 1/4 point. Some people even believe a 1/2 point. I don't see a 1/2 point. I would be shocked if there's a half. I'll shave this off. If there's a 1/2 point, I'll cut this off. How about that? Make a little bet there. Okay, consumer discretionary stocks broke out some new highs. Just a little peekaboo sort of double top breakout. It wasn't very consistent, or I don't know. I shouldn't say it wasn't very believable today because it did pull back a little bit, but that's hinting at moving to new highs there. You got the dollar higher. Same thing on the Fed possibilities there, and also the price of gold falling. Well, the other way around maybe, but you got what I'm saying. So a strong dollar after a pretty severe pullback, one of the weakest pullbacks it's ever seen in such a short time period, at least in the last 5 years from what I remember. Like I said, the next rate cut comes on July, the next rate announcement comes on July 31st. You think they're going to cut a 1/4 point? I hope not. But it sure seems that way. All right, and so then you have, remember, July is a strong month historically, 3 1/3% on average, if you go back over the last 20 years. And we covered those strong and weak areas for you on Friday, talking about the IBB being the best performer over the last 20 years in the sector-wise. So we don't have to do that again. 75% of the S&P is now above the 50-day moving average. You got services in first place. Financials in second, so making a little change there. Tech in third and healthcare in fourth. You have 59 new 52-week highs today. And we said we're going to point out a few interesting charts here when we can on that list. You got CBRE. It's sloppy, but it's a little bit of a breakout here to new highs. Technical traders are going to like that CBRE. Also hitting new 52-week highs. These are not suggestions. These are just interesting things that I happen to notice while I'm looking at these new highs. Legg Mason, that's a fresh breakout there as well. Still working on it, though. It hasn't convinced too many people. And then you have Visa, new 52-week highs today, and MasterCard, also new 52-week highs. Those are just monster power trends. That is the definition of a power trend if you're keeping focus or keeping track. There are 2 new 52-week lows today. Simon Property Group is the only one that really sort of sticks out. If you were to zoom all the way out, you see this 145 support here. Everyone that's talking about this one seems to think this is where it's going back to. There's a lot of relative weakness in there, and all that means is just a fancy way of saying when the markets are up, this stock is down. When the REITs are up, this stock is down. So this is it's a laggard in the area where people would say that's a relatively weak stock, and barring any major short covering or anything, people were kind of expecting that one to float back down to 145. You got analysts changing their price targets as well. I don't know. Beyond Meats pulled back a little bit today, about 5%. It's really starting to find its personality. I've mentioned that a few times about some new IPOs. That happens. The first sort of initial few days or weeks can be a little sloppy, and then it starts to find its range. Beyond Meats is proving to be a fairly volatile stock, actually. So if you like the active trading, you probably hope that sort of personality continues, but about 5% today. ConAgra had some positive things to say about the, what do you call it, fake meat market? Something like that. And I believe ConAgra owns a part of Impossible Burger. I could be way off on that one. I don't know why I'm thinking that, but I think they do. Don't hold me to that. Some other interesting things from the IPO world. Zoom down about 2% today. Not really a big deal, but a lot of traders are looking at this gap fill here. If you like that sort of thing, that may have caught your eye or is beginning to catch your eye. And then Uber and Lyft had some pretty strong reversal days today. Not necessarily a bad thing just yet because it's still in an uptrend, or what little uptrend you can actually track there. But that's not a good day. That usually doesn't bode well towards the short-term future. But hey, I'm just pointing things out. I'm not telling you what to do. Tomorrow we got vehicle sales from all the companies. Very interesting there. There's becoming this huge divergence in where people are or what brands people are spending their money on. We should get some more clarity on that as well. A company called Wedbush, they have analysts there that track Apple, and they said, hey, with this trade thing kind of resolving itself, or let me say, getting back on track. They think 20 to 25 more dollars to the upside for Apple. So if you own Apple, you have an analyst telling you he thinks it's got about another $25 in it, which would put it to new highs on the year. Yep, sure would. So that was out of them. Berkshire Hathaway and Warren Buffett going to donate $3.6 billion in stock to 5 different foundations. Nice work. Oh, and then I want to point this one out. You guys were asking about Carnival Cruise Lines and that sort of drop that, there you go, the earnings drop from the other day. Barron's came out with an article over the weekend saying, it is not me, this is Barron's, saying that this recent drop is a buying opportunity and is an attractive entry point for this stock. If that's not clear, I don't know what else to tell you, but I can't tell you to buy it, but Barron's can, and Barron's did. Anyways, what else do we have here? Just a couple more things. Tomorrow, you've got 2 Fed members speaking early. One in the morning. I believe he's over in London or somewhere over there. And then you have another Fed speaker. So two Fed speak members out there tomorrow. And Comcast paying out 21 cents in dividends coming your way. We own that one in our portfolio. So another 21 cents. Let those dividends add up. All right, let's see if you have any questions. I'm happy to answer them, and then we can go from there. Trump will not allow the markets to go down. He won't never see anything like it. He does like a strong market, doesn't he? Yeah. I don't know a lot about the guy, but you can't miss that one there. Yeah. You bought some Eaton Vance, was it? Let me see. Where'd you go? Sorry. Got to scroll back here. I need a bigger screen. Oh, you bought some Eaton Vance. You like that breakout there? Potential. I mean, I know it's like not the most exciting breakout, but nice. Cool. A lot of room to the upside there if it works out for you. I like it. You'd buy Alibaba all the way to 220, do you say? Well, hopefully you don't have to pay that much right now. Hopefully you get to buy it all somewhere in the 180s or 170s like it is now. Randy says the USA kicks ass and YouTube blocked it. That's crazy. It can read your language. Fascinating. Mary says, interesting how the inverted yield curve means something one day and doesn't the next day. I agree. I totally agree. We were having that conversation today in the office here. They were started to show the riots over there in you know what I'm talking about. Japan or Hong Kong. I can't think of it was Hong Kong. And we were talking about how if they showed that more and more and more, then more Americans would realize we could do the same thing here. How many times would you have to see that before, like, let's say the government came out with a tax on your IRA, and an additional tax, like Bernie Sanders and Elizabeth Warren, they want to tax your Roth IRAs. And so we were talking about, like, at what point would we see that and realize, hey, we could all just get together too and go to Washington and riot and all this stuff. So I thought that was interesting. But yeah, media, very much so. The inverted yield curve is a big deal when the market's topping, but when the market's doing real well, nothing. I mean, zero comment throughout the day because it doesn't get your eyeballs, right? Why you want to talk about a recession on the day the stock market's doing well? They want your eyeballs glued to the excitement. And I understand that in a way, but it's not very helpful. You're interested in Raytheon? Okay. Yeah, you got some news to deal with there, heightened volatility and everything. There's a chance the deal doesn't go through. I mean, there's a chance there's nothing. So I don't know. I don't know what to say there. If you're playing that sort of, what do they call it? Like sympathy? It used to be a name for that. I can't think of the name for it. How is Boeing holding so high with all these problems? Well, I mean, it's been selling off a little bit, and it has been an underperformer. It's not the end of the world because, it's not like their main jet. They only put out 42. They're still putting these out, by the way, but they only put out like 42 of these a month, or they scaled back down to 42 a month. So, I mean, it certainly hurt them in the short term. You looking for more blood in the street? JKR, he's like, man, come on, man. Just give me some $200 stock. Timothy, do you have any videos on teaching kids how to start out saving or investing? No, more towards like helping the parents. Nothing specifically for kids. That's a good idea, though. Yep. Unemployment is very low, and even the little upticks there don't seem to make much of a difference. Yep. Tesla's sort of going for broke. Yeah, I agree. Tesla, a lot of good news coming out there. Interesting technical pattern. I did a video a couple weeks ago about buying downtrends. So that's kind of helpful there. I'm not telling you what to do with it, but sort of helpful there. You've never heard Bernie or Warren say they'll tax Roth IRAs? No, they don't actually say it directly. It is a bill that they proposed. I believe AOC is on board with it as well, where they want to tax financial transactions. And those financial transactions count your 401k counts, your Roth IRA counts, and that's where it comes from right there. So it is not a tax directly on the Roth. It's a tax on the Roth IRA, the IRA, and it's not cheap either. It's about $5 for every $1,000 that you exchange, right? So if you sell $1,000 worth of stock, it's a $5 tax. So it's not like it's a cheap tax. They proposed that about 2 years ago, and they're trying to bring it back to life. Well, they tried earlier this year, but I haven't heard anything since then. But they firmly believe in that financial tax. I don't know. Because you can't say like, oh, we're going to tax Roth IRAs. We can talk about a riot. I'll lead that one. But no, I can't think of the name of it. I was going to do a video on it. I probably should. But it's the financial transaction tax. It'll go for everybody. VOO or VTI for a 20-year time frame. Why has it got to be just those two? Maybe you have your focus in on something in particular. What if you could do better than that? Yeah. Oh, cool. You're getting into politics there. What's the likelihood of them releasing the daughter? I don't know. Well, I'm not going to get into politics with you guys here. I'm just pointing out what's going on. Whether it becomes a tax or not a tax, I don't know. I don't know. By the way, you're always free to disagree with me. Just be nice. If you're going to be rude, I'm going to be rude back. Right? And you're only helping me because if you leave a comment that's rude and I comment back that's kind of rude as well, and that makes you mad, and then you keep leaving comments, you're only telling YouTube that this video is interesting and people are engaged with it and I make more money off of it. Just saying. There was someone who felt that I was being too political or something, and I'm like, wow, okay. And made double the money on that video, by the way. So thanks. Any idea why REITs fell? It's a question of the rate cut, right? Maybe Fed doesn't need to cut rates. They may still, but it's a question. And now there's that uncertainty. Remember, stocks, sectors, indices, you name it, they move based on uncertainty. They're boring and they just kind of trend when everybody's pretty comfortable. There's that uncertainty now, just a little bit, you know. So, wow, or what was your name there? Wop Master? That's a cool name. That was a reason, right? And it wasn't too bad today. They took the bulk of their beating, I think, last week. That was pretty nasty. You want to find the speed of your portfolio, buying some safe blue chips, but you need to add some growth since you're young. Any specifics like you recommend? Just highly active stuff. If you're looking for growth, how could you start with that? You could look up growth stocks. Now, it depends on how you want to define that. If you're going to define that fundamentally, then you're looking for those fast, rapid earnings growth stocks. You could use anything. I use that FinViz website a lot just because it's quick to show you guys stuff. I have no affiliation with them, but I think you can use it for free, and you can sort things like that. Like I want to see the fastest growing, fundamentally, the fastest growing stocks, and kind of sort through things like that. I have a paid version, so I don't know what's free. You might start there. A lot of good stuff on that site, and they don't throw a lot of ads in front of your face. Yeah. Any thought about the direction from the jobs data this Friday? No, I wouldn't. I would just be guessing. I think we covered this before with the initial claims and unemployment and everything. There's room for that to even spike higher and pretty dramatically higher before we even break long-term low or long-term highs. So I'm 250,000 was the number. We're at like 220 or something. So we could still get to 250 and still be now going on 91 weeks at record lows. So there's a little room there for that jobs number to even miss by a bit. Yeah. We'll see. I mean, we'll cover it, of course. Any thoughts about AMD at the current levels? It feels a little sluggish, doesn't it? I mean, today was good, but to me feels a little sluggish. Nice little uptrend. If you like buying strong stocks like that, you can't argue that that stock is not strong at the moment. So it's all good. Yeah, it's all good. And Steven's got a point there. I had a guy come, one of our customers came by the other day, very knowledgeable on AMD and and Intel as well. And he said the same thing. AMD is slowly taken over and the quality much better as well as far as the graphics and things. And he went into stuff I don't even know. He had a good insight to it though, I thought. Is the FinViz paid worth it? Yeah. But the problem is I don't know what was free and what was paid. I don't know why I'm paying for it. I think I'm paying for it for like the real-time sorting data, and I like that, right? Because we're building that eventually into the dojo, but for now, I don't think it's very much. So I like it. I don't have any complaints. It's not enough to where I'm questioning it, right? I enjoy using it, so I should put it that way. It's worth whatever it costs. I don't think it's much. Uh-oh, got a little AMD Intel fight going on. How would the market react to zombies? The market's all electronic. The zombies would have to get to the servers, I think, huh? What are your thoughts on the next Fed move based on Friday's job data? I really don't think they'll cut rates at all. I don't think they will. They've already changed their tone to say that they will do whatever it takes, and they call it jawboning. So they've already sort of done that to help people think like, okay, we're good. We don't need a rate cut. It didn't work. But they gave it a shot. I just don't think I don't see any comments or heads up. And usually they're so good at giving heads up about things like that. I think it's too soon. I guess anything could change. We'll see. We'll see. How many days has the inverted yield curve been in effect? We're on day 24, I believe. 25. What was the website? Oh, they're talking about FinViz. FINVIZ, I think, is what you're asking there. Yep. Assuming the recession does come in 2020, should you max out your 401k and simply save the rest of your money? Assuming the recession is coming, you should start saving your money now. But that's assuming the recession is coming. There's no reason that, think about it. I'm going to probably do a video on this. A lot of you are going to disagree with it, but the market's had a great run up, and now they're marking time in a big way. You know, we usually point that out on a day-to-day basis, a stock that went up and then sort of takes a few days off. Do that by the week. Look week after week, month after month, and see what the markets did. And now look what's happened here over the last year and a half. Nothing. Almost nothing, right? So you've got the market sort of marking time, burning off excess energy, and maybe preparing for the next move up. Now, we could burn energy for the next year, 2 years, whatever, but it doesn't mean the markets have to fall, collapse, crash, recession, and all that. I think if we had a recession, it'd be a great reset. There's a lot of stuff that just is like, I looked up, I just want to go to Disney, right? So I looked up, okay, I'm going to stay at one of these hotels. My goal is to stay at every one of them before I die. And $900 to stay at the Contemporary. It's not that nice of a hotel. I'm sorry. It's not that nice. Right down the road, you can stay at the Four Seasons for $700. Both of them are way too much. But it just, to me, it's like, wow. I remember 5-6 years ago taking my daughter there. And for $99, we got to stay at the Grand Floridian, nice room right there, take the little tram. It was awesome. So I think a recession would be okay. But short answer is, assuming the recession does come, remember the markets fall ahead of time, so I guess you would start preparing now. Yep. How does the stock exchange make money to pay their employees? Exchange fees. Very clever. I agree, Stephen. You guys are talking to each other. Yep. Should you dollar cost average in a taxable account with mutual funds? If you have a taxable account, you probably don't need mutual funds. You could use some commission-free ETFs, or if it's that sizable of account, maybe you just buy regular ETFs. You have a little more flexibility in a taxable account. Most people these days don't go over to mutual funds for that. Not saying you can't. It just, there's so many more options out there for less. So, could you? Yeah. When a stock is moving upwards on a weekly and monthly basis, but is slowly dropping over the course of every day, what does this behavior mean? So you're saying a stock is moving up generally, but for the last week or so has had a sort of a little pullback there, maybe like AMD or MasterCard or something. Those are normal pullbacks inside of an uptrend. Think of the breathing. You have to breathe out at some point, but you're going to breathe back in. So you're breathing in, you're breathing out. I think it was like a breathing out, let everybody catch up, find opportunity, and then that's what you see there. If that was your question. The jobs, yeah, I agree, Kirk. The jobs debate is a valid one. Yep. How do you have a recession when everybody seems to be able to find the job they want? When we get into that phase, and we sort of touched on that at the end of last year, where the jobs that were available were no longer like the better paying jobs. They were sort of service jobs, entry-level jobs, things like that. That's when you run into a little issue. And it sort of got there before, but the jobs numbers and specifics of those job numbers have come back. Michael thinks the markets can move sideways for some time, and that'd be a great thing, right? It would frustrate some people, but it would get you excited when the markets fell, gave you a little dip or whatever. I think that's what's going on. Every time the markets give you a little dip, people think, it's not the end of the world. Let me buy a little bit of this. And the rest of you or them get scared for really no reason. Yeah, Roku, great year so far. That analyst earlier in the year, I pointed out, like first thing in the year, he called it his best pick of the year. He's got to just be loving life right now. I believe he's the number one pick out there right now. It was a good call. Yeah. that was a clever one. I remember seeing that. All right. Sorry, I have to catch up with my thing. See if there's any other questions. How does inflation impact the stock market? In what sense? What do you mean? Like, you're talking about just generally, how does the inflation affect the stock market? It's more of a, call it a lagging indicator there, I would believe. Invest when others are fearful. You got it. You were wondering what you could explain what happens to when two companies merge like Raytheon and United Technologies. What do you mean? One of them will either absorb the other one's stock. I don't know if this is in the deal or not yet. I think the deal's still preliminary. One of them absorbs the other's stock, and it just gets lumped into one company. Which United Technologies did. That was part of two other companies, three, I believe, in the past. Was it McDonnell Douglas? I better not. I don't know. Cool. You have a choice of taking $550 cash now or $70K the rest of your life. You're 63. What do you suggest? I'm guessing you mean $550K. I'll tell you this. Mr. Josh Scanlon did a great video on this, on how to break it down, right? What's your return? What's your payout rate there? He did a great one, real simply, how to figure it out. I want to refer you to that one, and it was a lady. He was talking about a lady either taking a lump sum. It's a very obvious title somewhere. I think it was a live video. That is a great, he had a great way to sort of look at that real quick, because you want to dig deeper than just those headline numbers there. When can we get those hoodies? That was the stupidest thing I've ever bought. You know that? I love the hoodies. I think they're great. They're beautiful and everything, but I live in Florida. Oh, unless you mean these. These are really thin. These don't bother me at all. The sweaters, that was so stupid. There's like 4 of them hanging up. Somebody, you come by, you can have one. Do you think gold will go lower? Yeah, we broke down those stats for you last week to show why gold is going lower and is still going lower. Not based on my opinion, but stats there. Yep. Cool. All right. Well, I think looks like I got you guys' questions there. Everything is good. It's a good start to the week. We'll wrap it up there. We'll be back tomorrow, of course, and that's probably going to be it until Friday. We'll probably, because the half day is not going to be very exciting. If it is exciting, maybe we'll come on a little earlier. But other than that, I appreciate you guys watching. Hope you enjoy the rest of your day there. We will be back tomorrow and talk to you soon. See ya.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.